If you work or have worked at SpaceX, you've likely got a significant chunk of your net worth tied up in the company equity. Whether it's ISOs, RSUs, non-quals, or ESPP, the question that everyone keeps coming back to right now, what should I be doing now to prepare for a SpaceX IPO? And that depends on what kind of equity you own, how much you hold, and whether you have a strategy in place before liquidity arrives. Here are the 5 most common questions that I've been hearing from my SpaceX clients as of late. Question 1, will my equity automatically become liquid the day SpaceX IPOs? The answer is not right away. Your shares are going to convert to publicly traded stock, but most employees and former employees are going to face a lockup period of potentially 90 to 180 days where you can't sell. Now, the lockup period is highly customizable in the underwriting process. There's even the possibility of what's called a graduated lockup, where you may be able to sell a portion of your shares during that lockup period. Now, after that, for current employees, you're going to be held to different blackout periods around earnings and big company announcements throughout each year. So these trading windows might be limited each quarter. Bottom line, an IPO is not a cash out event. It's the start of a more complex planning phase. And if you're a former SpaceX employee, as I mentioned, these rules will also apply to you. Question 2, should I consider exercising my ISOs before the IPO? This is where waiting too long can cost you significantly. When exercising ISOs, the spread between your strike price and the fair market value triggers AMT, or alternative minimum tax. Exercise too much in 1 year and you're facing a large tax bill before you've even seen $1 of liquidity. Here's a simple example. Say your strike price is $10 a share and the fair market value is $100 a share. You exercise 10,000 shares and you've just created a $900,000 AMT adjustment, which could potentially have a $200,000 to $300,000 tax bill to be paid before you've even sold anything. The solution is spreading exercises across multiple tax years, coordinating with other income events, and holding long enough to qualify for long-term capital gains. So if the assumption is that SpaceX stock is going to continue to rise, exercising ISOs before the IPO would seem to be a smart idea. Question 3, what tax exposure should I actually be prepared for? Tax complexity is the #1 reason SpaceX employees and former employees come to me. The equity compensation at SpaceX isn't simple, and most general financial advisors don't fully understand how it works. Each type of equity is taxed a little differently, and the danger is when multiple events hit in the same year. ISOs trigger AMT at exercise, but can qualify for long-term capital gains. Non-quals are taxed as ordinary income once they're exercised, and RSUs are taxed as ordinary income at vesting, and with future growth could potentially be taxed at short-term or long-term cap gains. So exercising ISOs, having RSUs vest, and selling shares all in the same year, your tax bill can far exceed what you've expected. So spread these events across multiple years and you stay in control. So the people who do this best around an IPO are the ones who coordinate exercises, income, and sales across multiple years, not the ones who make the move all at once. Question 4, should I sell everything as soon as I can or should I hold? Most SpaceX employees I work with have 60 to 99% of their net worth in the company equity. When your career, your income, and your investments are all tied to one company, any disruption affects everything all at once. But the answer isn't sell everything immediately. A staged approach works best. That means gradually diversifying through the IPO liquidity windows, maybe funding some near-term financial goals with those proceeds, while maintaining meaningful SpaceX exposure if that fits your outlook. Diversification isn't a bet against SpaceX. It's how you protect the wealth that you've built. Now finally, question 5. What happens to my equity if I leave SpaceX? When you leave, you typically have 90 days to exercise any vested ISOs. Miss that window and they're gone. So often during an already stressful transition where you're managing cash needs, you could potentially be facing AMT exposure all at the same time. Non-quals trigger ordinary income once they're exercised, and any unvested RSUs are forfeited. So if you're thinking about leaving in the next 12 to 24 months, plan now, not after you've given notice. The earlier you plan, the more options you have. If you wait until you've already put in your notice, your choices narrow and things start moving really fast. Every SpaceX employee situation is different, so there's not a one-size-fits-all answer here. If this is something that you've been thinking about, don't wait until the deadline forces your hand. I offer a free 30-minute Explore meeting. It's a one-on-one conversation to walk through your SpaceX equity, tax exposure, and what a smart strategy could look like for you going forward. You can schedule that meeting at babinwealth.com/SpaceX. Thank you for watching, and I hope this was helpful.